Hi, and welcome to Crypto for Advisors, a podcast by Synergist. More than a third of Australians are into crypto, yet nearly 90% of advisors will not discuss it with them. I believe this is exposing investors to unnecessary risks, compromising the value of advised relationships, and limiting investment performance. My goal is to educate advisors and investors to bridge this crypto service gap while strengthening advised relationships. So let's get into today's episode. Welcome to Crypto for Advisors, podcast by Synergist. Today, our guest is John Bassilios. For those in the blockchain and Web3 industry in Australia, John requires no introduction. He's been a leading light in the industry since inception. By day, John is a partner at Hall & Wilcox law firm where he specialises in fintech. And by night, he's on the board of DECA, the Digital Economy Council of Australia, where he has served for more than 5 years. The scale of John's influence in the industry is evident by his 7,000 plus followers on LinkedIn. When John talks, people listen. So we're very fortunate to be able to pick his brains in this episode. John, welcome. How are you today?
I'm excellent, and thank you very much for having me.
My pleasure indeed. Okay, so John, we've got 3 topics to cover off today. The first is progress on ASIC regulations. The second is looking at the US framework, regulatory framework. And then finally, the third one is a bit of guidance for advisors on how they might be able to discuss crypto with clients or not. Last week, you had a very busy week up in Sydney. It was policy week for DECA, and their policy week was jam-packed. What are your key takeaways, John?
Firstly, Policy Week is actually the brainchild of Blockchain APAC. It wasn't a DECA event, although there was one day in which DECA did hold a number of roundtables as part of that Blockchain APAC Policy Week.
Thank you for the clarifications. Good to have a lawyer keeping me on my toes.
Look, I think the key takeaway from me, or that I took away from it, was that Australia is really behind the 8 ball. We're lagging behind quite a number of jurisdictions that have come up with some crypto-specific legislation, and Australia is falling behind because we were following the US and the previous administration in effectively trying to shoehorn crypto into the existing financial services regulatory framework. Now, the winds of change sort of coming about now because of all of the changes that are happening in the US.
Cyclone of change.
Yes, which I know we're going to get to. But I think also that the strong feedback from many at the conference is that interpretation of existing law put forward by ASIC just before Christmas probably goes a bit too far. And it's trying to put a square peg into a round hole, and is probably not conducive to growing and sustaining the crypto industry in Australia.
I do feel for ASIC because they have attempted a number of approaches, haven't they, over the years to try and get their head around it. But it's a fast-moving and still quite a young industry that's evolving so rapidly. It's hard to understand it for the insiders. So for a regulator, it's particularly difficult, and especially when, from a regulator's point of view, they are supposed to be getting direction from the legislators, from the politicians around what the policy is and what they should be implementing. And they're not getting that direction either, are they?
They are to an extent, because Treasury did put out a consultation paper for the regulation of digital asset facilities, and that was targeted at digital currency exchanges and custodians of crypto. And in that paper, Treasury took a position in relation to certain types of crypto assets, and the underlying assumption with respect to those types of crypto assets that Treasury had included in their paper was that they were not financial products. And unfortunately, ASIC has taken a different view and a different approach in relation to some of those crypto assets in its recent consultation paper.
That consultation period's now ended, has it? All the submissions have been completed and now they're in deliberation on it, or?
Yeah, exactly. So I think the consultation closed
End of
the
Feb, I
end
think.
of February. And we expect to probably get another draft of that consultation paper after ASIC has considered all of the submissions in the next few months. We don't have a definitive timeline on that.
The last guidance that I saw from them was that they were talking about establishing the licensing regime around a digital asset facility as opposed to the underlying tokens. Do you think that's still the direction they're heading in, or it'll change?
That was the direction from Treasury, not the direction from ASIC. ASIC's position is that most crypto assets are financial products, and therefore anyone who deals or advises on them requires an Australian financial services license under the existing Australian financial services licensing authorisations. What was proposed by Treasury was that there would be a new specific authorisation that would fall under an AFSL for digital asset facilities.
Okay. And so given that there's no specific AFSL for digital assets yet, presumably that means you'd have to be treating them as a security and you'd have to be licensed as a security AFSL?
Yeah, correct. I mean, it's not limited to securities because securities are one form of financial product. There are many separate definitions of different types of financial products within the Corporations Act. And ASIC's view is that most crypto assets fall into one category or another of a financial product within Australia, security being one of them.
Do you think that for the vast majority of Australians who are investing in crypto, that there is actually quite clear regulatory framework for them to be operating in, and it's really only when you start doing more sophisticated things on the edges of crypto and blockchain, like I mean, staking and then airdrops and onwards, farming and all the rest, that it starts getting a bit more uncertain? Or would you? Is that your
Look, I
read on
think
that?
that even for traditional, straightforward buy sell of crypto, the answer is not as clear cut as one would like it to be. And it's something that all of the exchanges have been grappling with. And most exchanges undertake a due diligence before listing any token and get a legal opinion that it's not a financial product. However, our definition of financial product is so broad that if someone wanted to make an argument that a certain crypto was a financial product, you probably could. Some of them are difficult arguments to make, but nonetheless, that is ASIC's current position that it's putting forward. Now, a lot of us in the industry think that ASIC is stretching the interpretation a bit with some of these crypto assets, and our legislation is principles based, which makes it a bit harder for you to come to a definitive conclusion, and there's a lot of grey that exists.
Are you optimistic that that grey a light will be shone on that and will either go black or white a bit more in the coming months, or do you think it's going to take years before we really get to a point of clarity?
Look, I think that we will get more clarity from ASIC in its next iteration, but I don't think it's going to be the sort of clarity that we would want as an industry. And it's more likely that that clarity will come from crypto specific legislation and amendments to the Corporations Act. And that needs to come from the politicians.
Yeah. And what's your feel on how far away that might be in Australia? Obviously, in the US, we'll talk about in a moment. There's a lot of afoot there. Do you think that that'll flow fairly rapidly across to Australia, or it's going to take us years to catch up?
Look, I don't know how long it will take, but I will say this. Politicians on both sides of government are saying all the right things. But we're coming up to an election, so there's a bit of skepticism there. But having said that, the things that they are saying suggest that they will, very soon after being elected, do something about it. What that is exactly, we don't know. The Labor government have suggested that they would introduce legislation that is based off the back of the digital asset facility consultation that was held, or based on the Treasury paper that was released probably, I think, a couple of years ago now. And if that's the case, look, I think it's probably about a year after the election that we'll see something.
Yep. Okay.
And hopefully that applies equally to, a Liberal government as well.
In the US election, crypto, particular strategic Bitcoin reserve, became quite an election point. Decker have just come out with some new bit of a PR push, and in there I noticed that you're quoting, I think it's 8 million Australians own crypto. So that's a large portion. That's more than a third of the population. And so if that's the level of adoption from voters, surely the politicians will be forced to have some sort of position. I mean, there's going to be votes in it, isn't there?
Absolutely. And I think that's one of the reasons that, amongst many, that the politicians are now taking this a lot more seriously and coming out and putting forward public positions on it.
The other key thing that, from a political point of view, is when you look at the economic impacts of blockchain in particular, that's the holy grail for the the financial services side of politics is you're trying to stimulate productivity growth through innovation, and because otherwise you have to rely on immigration or other blunt levers which aren't as effective. And blockchain does seem to be a really good opportunity to take costs out, do things more efficiently, open up commerce, and drive innovation. We are behind the eight ball, as you said, compared to other jurisdictions, but the blockchain industry in Australia is quite vibrant. There's a lot of businesses out there trying to pioneer new initiatives in this space. I'd hope that the politicians also recognise that and want to stimulate and encourage that industry because that can have a real economic impact for Australia as well.
I totally agree with all of that. And from an innovation perspective and activity perspective, I think Australia punches well above our weight. We have many innovators doing great things in Australia. A lot of them, though, will be challenged to keep their business here in Australia if ASIC does actually finalise a position that is similar to a draft consultation paper that it's released recently, because it has the potential to make them uncompetitive compared to other jurisdictions.
I recently had Andrew Ward on, who's Self-Wealth, and he's now working on Liquidize. He's a bit of a serial entrepreneur in the fintech space. I'm sure you know Andrew.
I do, yes.
And he was talking a lot about UAE and how is chalk and cheese compared to ASIC. ASIC is a bit of a combative relationship and challenging to engage with, whereas in the UAE, they actually want you to get regulated. They want you to succeed. They pay for a lot of your expenses. They put you up there because it's a privatized system, the regulation over there. And so he said it's just poles apart. Now, I know we're not going to get to the UAE or Singapore sort of level, but it does show that if you're an entrepreneur, you're trying to set up a business, ASIC and Australia has to really make that a more attractive proposition to keep these innovators in Australia.
I absolutely agree with that. Yeah, UAE, they've come up with a very crypto-friendly legislation, which is specifically designed to attract businesses to that area of the world and get them to establish their business there to increase their productivity and GDP and whatnot there. And it's an area that they're specifically targeting and welcoming of, and their legislation is quite innovative and encouraging of the industry. Australia is never going to be a follower of jurisdictions like the UAE, unfortunately. We'll follow jurisdictions such as the UK and the US, which is why, which we'll get to shortly, the winds of change in the US are going to be highly influential in Australia.
Well, that's a perfect segue, John. Let's jump into that now, shall we? Trump set up right from the start of his tenure, even before he got into office. In fact, he appointed David Sachs as his crypto and AI czar, and there's some Russian overtones there, but we won't get into that. And tasked him with pulling together a committee from both houses of parliament over there, the Senate and the House of Reps. And he's done that very rapidly. They've already come back with the first thing on the agenda, which was the strategic Bitcoin reserve. Underwhelmed the market. They kind of did the bare minimum, but I still think that's an incredible advance and has not been priced into the market, my personal view. But the second thing that they're tasked with doing is coming back with a new regulatory framework, and that's due in August. How significant do you think that's going to be for the US?
That will be extremely significant for both the US and the rest of the world. As I said before, Australia will be a follower of jurisdictions such as the US. And the other thing that's also happened that's really important as well is the head of the SEC is more crypto friendly, and they've dropped over half a dozen cases against crypto firms with prejudice. So it gives a lot more certainty to the industry and is fantastic for the growth of the industry within the US, and provides a lot more certainty that the regulator is not taking an enforcement stance as had in the previous administration, and is being a lot more friendly to the industry, including coming up with specific rules and legislation to help facilitate the growth of the industry in the US. And I think Trump has specifically come out and said that he wants the US to be a leader in crypto. So
Yeah.
that tells you quite clearly the direction that this legislation will take.
Yeah, look, from a symbolic point of view, he pardoned Ross Ulbricht, which is very significant for the Bitcoiners, maxis. But from a practical point of view, he also repealed SAB 1.2 almost instantly, which allows US financial institutions to treat crypto as an asset rather than a liability. Do you think that every financial services business in America is dusting off their plans on blockchain and what to do about it at the moment and getting ready to enter into the market?
Absolutely, without a doubt. So the reason that I got into crypto in 2017 was that after reading about it, I thought that it was just an amazing technology and it was just going to touch our lives in so many ways. Personally, professionally, through government, we were going to see crypto or blockchain technology everywhere. And one of my thoughts back then was that all financial products, FI products as well, will be on the blockchain. And that's still my view. And we can see the shift occurring already with a number of traditional financial services providers getting into crypto and also tokenizing traditional financial products. And that trajectory is just going to continue in an upward manner, I think.
Yeah, even last year, Larry Fink, the CEO of BlackRock, the world's largest asset manager, came out and said that in 10 years he thinks that all digital assets will be tokenized.
All traditional financial assets will be tokenized. Yeah, that's right.
Incredible. That's so. If I think about that from a macro factor, you've got suddenly all of these established household brands, trusted financial services brands, all starting to push into blockchain, Web3. That's just going to have a significant cultural impact. From an acceptance of crypto, a legitimization of blockchain technology and cryptocurrencies, which is obviously quite bullish. But also, the whole foundation of this technology is that decentralization, which makes things faster, more transparent, immutable, and all of that equals less cost. And that cost hopefully gets transferred to the consumers, the users of these systems. Do you think that will democratize finance, address some of the wealth inequality issues, or do you think I'm being a bit too aspirational there?
I think it will to an extent, but I'm not as hardcore believer as others that, this is going to change the paradigm for those that are disadvantaged within our society and somehow magically make them wealthy. That kind of makes sense for people who got in early into Bitcoin and other things that have gone off. But yeah, I just, you kind of have to have money to make money. So I don't know that it's the panacea that everybody talks about, but absolutely heads in that direction, but it's not as absolute as others might make it out to be.
I think as an investment class, Bitcoin's been the highest performing asset out of any asset class 9 out of the last 12 years. Past performance not necessarily an indicator of future performance, but a 9 out of 12 is a pretty good track record. But I think beyond even as an investment, just as an access to reliable financial services, we're lucky in Australia and we take it for granted that we've got a secure, stable financial system. We're not worried about a bad actor or a government just taking our money out of our bank account overnight or the system going down and us not being able to make transactions. But that is the reality for a lot of the world's population, and cryptocurrencies and blockchain can help address some of those things and just even make financial services accessible and reliable for a lot of the population.
Yeah, no, I think that's true. And I think in jurisdictions where, inflation is rife, a lot of people put their money into cryptocurrency instead of the locally denominated currency to hedge against the inflation risk. Definitely. Yeah, I agree with that.
Even in Western democracies now, we're having to do that with inflation has been quite high lately. You do have to start thinking, if I'm just putting this in a bank account, I'm going backwards.
Absolutely. Yeah.
Yeah, yeah. It'll be interesting to see how the central banks go with a quantitative easing and increasing the M2 money supply. If that trend continues, that obviously is the main driver of inflation. Trump seems intent on sort of driving the dollar down, but China seems intent on stopping it from. So, fascinating world at the moment we live in with all the macro political plays going on, isn't it?
Yeah, absolutely. It's creating a lot of uncertainty both in the traditional market and also the crypto market. So we'll have to wait and see what sort of comes of that.
We will. We will. I'm looking forward to seeing. I think Bitcoin's on sale at the moment, so that's great. Okay. All right. Let's move on to the third topic then, John. So a lot of our audience here are advisors, financial planners, accountants. There's a recent core data study that came out last year and said that 89% of advisors won't talk to their clients about crypto, and that's leading a lot of their clients to go it alone and basically have to jump on Google and try and navigate their own way. And as you know, there's a lot of fraud. A lot of people lose a lot of money on crypto for a wide variety of reasons. So with accountants and financial planners, what can't they say? What are the legitimate concerns that they really have to be careful with and avoid versus what can they do to support their clients if they ask them about crypto?
The main barriers for accountants and advisors in advising on crypto is PI. So a lot of PI policies specifically exclude crypto. They don't want to wear that liability. Another reason is that they can't get crypto on approved product lists. And another reason is they just feel ill-equipped and don't have the knowledge to be able to actually advise them. So what can they do? They can help clients still come up with their risk profile. So coming up with a client's overall risk profile will help them in determining what percentage of their assets should be allocated to high risk and speculative assets. Now, once they come up with what that allocation might be from a percentage perspective from their overall investment allocation, they can refer them on to other people who have that specialist knowledge. They can advise on crypto and crypto assets because obviously the crypto assets would fall within that, generally fall within the speculative asset range within a portfolio allocation.
Are there any PI insurance providers out there that have got a more progressive mindset? If they might, for example, look at Bitcoin and maybe the top 5 by market capitalization and say, you know what, the risk profile of Bitcoin today is quite different to what it was 5 years ago. There isn't any reason why this shouldn't be covered. If you're just dealing with Bitcoin and maybe the main layer 1 blockchains, that's okay. Are there any that are adopting that approach yet?
I can't say that they're adopting that specific approach, but absolutely there are insurance providers that are specifically targeting the crypto market.
Great. Okay.
However, the cost of the premiums is potentially and usually cost prohibitive. It's difficult to make the business case that I as an advisor should take on this risk and pay this premium. So for the time being, until premiums come down, advisors might be better off just referring their clients off to specialist crypto advisors and education providers such as Synergist.
It's a classic risk return continuum, isn't it? And they've got Bitcoin and crypto up in the top right corner. But as Bitcoin gets accepted by big institutions through ETFs, as even corporate treasuries are now starting to put Bitcoin on their balance sheets, following the Michael Saylor approach. And then you've also now got sovereign states, the US saying we're going to put it into a strategic reserve. So surely all of those things are lowering the risk profile of Bitcoin, and that's happening quite rapidly and quite significantly. How long do you think that's going to take before that change in the risk profile of Bitcoin gets priced into the market through PI insurance premiums?
Look, I'm not going to try to speak to it from the perspective of whether or not Bitcoin risk profile is different, but I will speak to it from the perspective of the more people that you have in the market that are covered by insurance, the lower the premiums will be. So over time, from an actuarial perspective, you've got a pool of money. That pool of money is currently small from few providers that would cover crypto insurance event. But if you've got a wide variety of providers that are paying premiums, then that will in time reduce the risk to the insurance companies and therefore reduce the premiums that are payable by those who take out insurance.
Well, let's hope that happens sooner rather than later. And that's interesting from a risk profile point of view, because I've actually heard industry people say the exact opposite. You can never talk about the risk profile of a client when it comes to crypto. But my view has been the same as what you've said there, is that, well, no, you're an advisor you've got a holistic relationship with your client, and crypto is just one asset class. It's a speculative asset class. And depending upon the client's risk profile and goals, they might have, BlackRock is recommending on a balanced portfolio that their clients should have 1% to 2% allocation in Bitcoin, for example. A younger, more aggressive investor might have 10%, 15% allocation into crypto assets. So it's good to hear that they can have those conversations at a holistic level with the client. which is important for them to retain that relationship with the client rather than have the client just go off to an exchange and start doing something completely independent.
Yeah, absolutely. And I wasn't necessarily speaking to it from the perspective of talking about crypto specifically, but just more so, where your advisor wants to be even more cautious, you just look at it from the perspective of the overall risk profile from an asset allocation perspective without specifically talking about crypto. But you might, based on a particular client's risk profile, they might allocate 10% to speculative assets. And that doesn't mean that the advisor has to advise on every single asset that goes into that 10%. But just know that overall they should be at 10% and then refer them off to other people who might advise them on the specific crypto chunk of that 10%.
Yeah, great. And for our viewers, that's indeed why Synergist is playing in this space, is to try and offer an independent option for doing that. I think that it's important that if you're going to send your clients to someone, that they do need to be an expert in the field, but also independence is important, that you're not putting them into a situation where there's a predetermined outcome that they're going to get funneled into an in-house product, for example. And so that's what Synergist is attempting to do, fill that void in the market with some independent education, help them decide if crypto investing is right for them, and if so, the best way to do it, and then hand them over to trusted partners, either as a broker or an exchange or an ETF, depending upon what the right solution is for that client.
Yeah, exactly. But actually, that raises a good point, because to an extent, advisors can advise on crypto indirectly by advising on ETFs, which are technically not crypto products; they're actually financial products.
Yeah, that's right. And so they do have access to crypto products. But even with ETFs, there are nuances in there. Like if it's a feeder ETF, your risk profile is quite different, right? You've got then. So not all ETFs are created equal. And ETFs are great for a lot of clients, but they're not great for others. I mean, when Trump got elected, Bitcoin went up 18% over a weekend. Now, if you're an ETF, you're locked out of the market, because they trade during market hours. So you wouldn't have been able to access the market in that situation. So there are some nuances to it that you need to consider, and that's why you need to talk to an expert.
Definitely.
All right, great, John. Look, we've covered off the 3 topics. That's fantastic. I really appreciate your insights. Are there any other pearls of wisdom that you would like to pass on to the accountants, financial planners of Australia?
Other than not discounting crypto altogether, and just thinking about referring clients off to people who can actually advise them, because in one way or another, clients will come to crypto, whether it's through your referral networks or not. It's better not to leave them to their own devices and refer them on to trusted partners.
Yeah. That duty of care of protecting your clients is a really key part of that advice relationship.
Exactly.
Right. Well, it's been a pleasure, John. Thank you so much for your time, and hopefully we get to do this again sometime soon.
Thank you very much for having me. I really appreciate it. Have a good day.
Thank you.
Bye.
This podcast is for informational purposes only and does not constitute financial advice. All views of Andrew McPhee and his guests are their opinions only and do not reflect the opinions of Synergist. You should not treat any opinions expressed as a specific inducement to make a particular investment or follow a particular strategy.